bias today. Hey Ivan, how are you?
I'm sort of thinking buy to sell,
Buy to sell.
buy up and then sell off.
Yeah. Have you got your, hey mum, hey Mo, have you got your levels sorted? Let's have a look. So we've got, there's a German over here. We have price, beautiful reaction area, wasn't it? There was literally to the pip. Yesterday's, when we scammed the market yesterday. This is still the trade box, still running from yesterday. And it literally hit that London 50% to the tip. Which was your New York high, hence the target area. Now, we had that, because you had a descending trend line, didn't you, Justin? You're looking at...
Yeah, that's right, yeah.
You're looking at this. You're looking at that. And then, yeah, beauty. Absolute beauty. And then we've got another level, NY low. Where's Glenn? I think he's gone on his trip today, isn't he? So NY low. So we've got a big news candle from yesterday from our CPI. We've had a little bit of a bounce, and then we've had a little where it just consolidated. We've got news again. I'm just recapping because now we started the YouTube stream. We've got news again today. We've got Euro interest rates. So I'm not expecting wild moves because they really want to wait and see what they're going to. It's not what they're going to do. They're going to hold, no doubt. They're not going to. I highly doubt there's going to be any surprise cuts. If there's a surprise cut, the slim chance that there is, sell euro because that will just absolutely shock the market. But I wouldn't be banking on that. What you put banking on is the language they use when they bring out their statement and when they do their press conference. So everyone's sort of waiting to see what they do here. So I doubt we're going to see any sort of major moves. But core PPI is going to be the prime mover here. Unemployment, they're kind of expecting it still to stay flat. So any surprises upside as well might recover. If we get a high number, we're likely to see US dollar continue strengthening, and we're likely to see equities suffer a bit. If we get like a surprise number to the downside, or even just a slight tick under, and unemployment come in higher, then I think we'd see treat it with a grain of salt. But what we'll do for that day, as I believe we'll recover some of that CPI drop. So there's a scenario if we get either way, above or below. But because we've got such big news, I doubt we're going to see extreme volatility with the London Open. But I would like to see a sell to buy to sell. So I'd like to see price. Like I'd like to target taking the sells. But if we drop down and then we start showing some bullishness, I wouldn't mind maybe partaking in the buys and then into the sells. But we'll just have to keep an eye and see. We've got, what else we got? That's German. NAS, I won't look at really until NYSE. Gold, I think, look for buys. I know US dollar strong, but I think there's a lot more risk here that the Fed it's getting to a stage now that this inflation battle is getting so sticky that maybe it's going to have to take a recession to get inflation down. So if US cut early, that'll lead to a weakness in the US dollar, and gold should benefit. If the threat of a recession is approaching, then gold should also benefit. Now we've got war news as well that's simmering away. Gold should benefit. So I see a world where gold, all these levels, these support levels, it could be really tough trading into these support levels. Even though we could see US dollar stage a bit of recovery, the demand for gold at the moment, the uptrend that we have, the looming three-pronged threat of recession, rate cuts, and war should all lead to gold being supported. Just be careful of profit taking and any short-term US dollar strength. But I could imagine gold would also, if you got a, let's say it this way, if you got a bullish bias for gold, then make sure you're targeting like nice liquidity areas to take buys, or wait for the manipulation to be done before you think like say if prices come down, making like a triple bottom, making a support, and you want to take longs, but you're worried about taking longs because you're worried that maybe you're wrong and it's going to do like a breakout. If it does the manipulation and now it's pushing bullish, then look to see where it's grab this liquidity. Now where's the liquidity that's going to? And then you can like take it along the way. So maybe just have to wait for the manipulation to be done before targeting those buys. Either way, it should be a lovely day. I'm really looking forward to it. And yeah, German, I'm thinking I'd like to see it move higher. Just need to see how it gets up there. Welcome, Bruce Lee. How are you?
Hi. Good morning.
Good morning. Where's your? Do you have any zones that you're looking at?
Yes, I do. Let me try to share the screen.
Do you want to share your screen?
I can't.
Okay.
You have to allow me.
Yeah. I'm gonna stop share. There you go, mate.
Now I just have to find which one.
Which secret screen?
Yeah. Oops. Now it's the system doesn't allow me.
You on the map?
Okay. Yeah. Hold on. Okay. Sure. Oops, this is cool. Okay. Asia left big holes here in the on the price. I think it's gonna go down before going up, and the target will be this MMG. After this, I think it will go down later on New York. That's what I think is gonna happen.
Mm-hmm.
Hong Kong was pumping. I mean, like 300 pips. When it hit the MMG, it fell down. This MMG, the 11.
Yeah.
for today's MMG. Apart from that, I don't know what's gonna. If they don't fill these holes here now at the open, that means they will be seen later on. In a good sense, it's a good thing if they don't do it now, because then I'll know for sure that later they'll come to see it.
Yeah, it'd be nice if they do pump up, to pump down.
Yeah.
Pump and dump.
If it pumps up now, it would be perfect and leaves these gaps in the price. That would be a good sign. It means we would know the direction in New York. Now, if they fill this, I mean, it's very close now to filling these gaps. So we'll see.
How do you draw this thing?
Which
The thing that goes up.
Oh, that's an indicator.
Oh, it's an indicator. Gotcha. Yeah. Okay, I wasn't sure if it was like a triangle thing that you're using.
No.
Okay. Cool. All right.
So this green hair, it's also the Hong Kong gap, but this Hong Kong gap has been seen yesterday during the news. Actually,
pre-news. Oh wait,
we can see.
Yeah.
It went to the one Hong Kong gap. It filled one Hong Kong gap that wasn't filled from very old.
Yeah.
Yeah, from March 20. That hadn't been seen. Went from one gap to the other. So this Hong Kong gap has been seen. I don't think it's that important. But the MMG here,
Yeah,
it's a potential target.
18,185. All right.
Yeah.
Cool. Thanks, man. Anyone have any questions?
No problem.
Good morning, IP. How are you? All right, I'm just gonna take over again.
Okay.
It's 18,190. So that's about, yeah, in the ballpark where we're looking over here as well. That's this area here.
The liquidity wick
Yeah,
news
right there.
that's on the 3 hour.
The 3 hour. Yeah. From a liquidity point of view as well, I can see that you would have people eyeing off this trend line as well. So when price comes back up to this little trend line, if it comes up, what it can also do is that you would have people willing to sell, or you'll have like liquidity building around this trend line. So it could push up and then take that liquidity and then come down again. So people that are looking to sell, that trend line can fail. Price breaking out above that trend line, people looking for breakouts could fail. So longs you lose, sells you lose, then it does the manipulation, grabs that liquidity, and then maybe with the catalyst of the PPI start to drop down again as well. So I really want to target this area to trade up towards as well. If we can see some manipulation from here, I'd love to trade up to that, because I believe that is liquidity sitting there.
Yeah, I agree. Also on the 4 hour structural low has not been broken. So that low you were talking about, where that the move
This one
more
here.
starts.
Yeah.
Yeah, so for the 4 hour. Oh no, I'm looking a bit higher. So the next higher low, where that doji is, yeah, there. So price hasn't actually closed underneath that. So I had that as a sort of a structural low, and all this current price action on the 4 hour across where we are now has failed to actually close under that. So I'm still long from this area.
Cool. And the thing as well is that we've been trending down, and we thought yesterday there was a huge chance that those sells would happen, because like this if this is your like consolidation area, yesterday's we're up here, so we haven't quite dropped down there yet. Now we have. So now we've hit this area, and there's two trains of thought. We've got one, yeah, I get it, inflation's high, interest rates probably going to need to stay tighter for longer, but the other side as well is that with inflation being high, that means there's still demand, and it's not like this is demand from it's not like it's a supply issue, supply led demand like COVID, and during the reopening there was this lack of goods, hence a lack of supply pushing price up. This is consumer led demand, like this is called pull inflation. So just strong demand is pulling inflation higher because people are just not stopping, it's not slowing their spending. So if there's still a lot of demand in goods with AI as well, then projection estimate earnings for businesses are going to remain quite high, and that's what also drives the stock market up. It's not just inflation being high or financial conditions, it's really unemployment rate as well. Unemployment's quite low, so it means people still have jobs, that means people still spend, so that could be really good for the stock market. It's just the valuations are a bit out of control. Anyway, we're at London Open, so I'm pretty bullish still. I would love to see a drop to then go up towards that level before seeing inflation sort of take over. It's just how do we get into that? So we had that little, did that drop like in the last, like same as yesterday where we had the 3 minutes before the little drop and then pushed up, and now we're doing the same thing again. The little drop just before and then push up.
30-minute imbalance is interesting. Right in the middle of, it's below where price is now.
Oh, this one here.
Yeah, I don't know. I mean, it seems inviting if we don't want to look too far for liquidity.
Yeah. It's the 50% of Asia as well. So bang on it. Bang on 50% Asia. Yeah, not as good.
Yeah, killed one of the gaps. There's still two below.
There's still two more. Where's your lowest one? That's in this area.
It's on that area.
What price? Can you give me one?
Yes, it's 59.2.
59.2.
180, 59.2. Actually, sorry. Yeah.
That's actually
180, 58.9.
Okay.
It starts there.
Yeah, we're pretty precise in this group, aren't we? No. in the areas. That's good. Cool. That's like a 40 pip drop. I kind of think it's just gonna go. Did anyone jump on that one? Going long out the gates. I'll catch it, Justin. Nice work, Mo, as well. You're on the gold buys earlier. Kind of keen to take. I was gonna say I was pretty keen to. I don't want to go long. Normally, I don't like just the. I really don't like being long and on indices and gold at the same time. I know they're correlated at the moment, but so many times they haven't been correlated. Hey Jose, good morning. Didn't place a pending order. You didn't place one. Okay. Yeah, I mean, does everyone agree with like the analysis or like the idea? So where's liquid? Looks like if this is the manipulation, then it can at least push up to this area. Okay, come on. Love to see it just a sweep into this zone to go long from. You still in, Mo? Nice one. There's all the chance that this has already done this. Come on. Chance that's already done that. That's doing this. But let's just see. Let's just see if they're greedy. And that price is sort of spiked down, pushed up, and then that's the liquidity generated. First 5 minutes in the books. Bullish engulfing candle. Taking out some of these imbalances. It'd be nice if it can create like a little bit of a trend down. And then go boom. Anyone else that hasn't spoken? What's your any bias? Any levels you've got your eyes on? Planning on a sell to buy, looking for that gap too. Where are you thinking of selling from? Be careful selling inside of here, in case this is the manipulation that's done. Waiting for the buy? Yeah, good. Dave, agree with analysis, sell to buy. Might be on the way up now. It's struggling.
Sell to buy for me.
Sorry, Sarah, it's a buy for you?
No, sell then buy.
Oh, sell then buy. Brett's also looking around this level. Nice. I'd love to see like, what would be really great is to have seen this open and do like a spike and then come up. Because what happens often, so look, I think we've got time. Let me just put some alerts in. I was saying off air before yesterday about this move on gold. taking the sell up from above this liquidity that got taken. Yeah. That enter the sell from this bit. And what I saw was price spike up like this and then drop down, and it was leaving a candle. It was leaving a candle like this. Like this. And then after it spiked, I put my entry above that spike because I had a bearish bias, and it came up and then went down again. So if you notice this exact little bit on these candles, if I go to 1 minute, it was this. This was the spike, and then put in your entry above that spike. Quite nice. And then there was a trade on, not yesterday. It wasn't yesterday, it was, oh no, it was yesterday actually. It was on this German trade. Yeah, here it is. Like late in the stream, late in the session. So, as we know, yesterday's trade, it's have I deleted it? I've deleted it now. So we took the trade, got the buys initially, and then towards the end of the stream, took another buy. Somewhere, where was it? Somewhere inside of here. Yeah, somewhere inside of here. No, here. Somewhere like here. That's right. I think this was the HCS, wasn't it? And then price pushed up, and then it came down. And I was saying, if price can start to push up, if we can start breaking above this level, then this was the target over here. And I saw this candle. I saw this candle spike up above this resistance over here. This one. And I thought this one was just thinning the liquidity above it. So I thought once we spiked up, when we came back down, I thought it was a good chance to add a little bit more. Only a tiny bit, because I'm still like testing this out a bit. But targeting this high for sure. So put in something on again to see if we can push up and then eventually get there. But once it's spiked up above, like if you've got a resistance, let me just go to price, I'll keep an eye on it. If we have like a resistance and you've got a bullish bias, price comes up. And then you've got that resistance. And you're still thinking it's going to go up to like say here. Price wicks up, spikes, comes down pretty quickly. You can target that high at the very least. It might reject from here, but you can at least target up to that level. And if you can get your risk out and still see if you can like hold it for your main target, then you could be in a really, really good situation. Oh, cool. No, yeah. Looks like gold's running okay. It's 30 pips from the open. Do you think manipulation's been done? Do you think we could look for... I'm keen to buy gold. I really think we're going up. Come on, drop.
Woke up with this music in my head. I think I was dreaming about it. No concern.
This one?
Yeah.
Nah. I gotta change. I have to change it now.
It wasn't like a nightmare or something, don't worry.
What about this one? This one's building something. It's the relaxing calm.
Hello.
Who was that? Hey Rob, how are you?
Rob, sorry mate. Yeah, good. Sorry, late.
That's all good, mate. Haven't missed anything yet. Just
No.
priceless analysis and guides
Cool.
and a rule book for a playbook for the day. That's what you missed.
Yeah, all the important stuff.
How'd you get on yesterday?
Yeah, right. So yeah, on one account, Smart Charts, I yeah did really well. And what was that?
Oh, just use some language.
Ah, yeah, that one. Still having massive issues with it trying to manage trades. Just doesn't let me freaking adjust them. But anyway,
You need one-click trading. That's what it needs.
it needs to be just thrown in the bin. The whole platform is just crap. But anyway, did all right on that one, and I've still got a trade going from yesterday on gold. So it's I'm deciding whether I kill it or keep it going.
Mm-hmm.
But I managed to buy down at, where is it, 23, 26.
23, 20. Oh, nice one.
Yeah, but it's a really small position anyway, but it's digging around, it's sort of hovering about that same spot now for a while.
Oh, is Mark here? Where's Mark? Oh, Mark's not here. He got his first 100 pip trade yesterday.
Oh, sensational.
Yeah.
Sensational.
So
Yeah,
far, this
good
trend line's
when they,
holding.
There's a guy on Akshay's group who doesn't really participate much, but he just posts his daily trades with just obscenely high profit taking, like just
TJ.
no. He was trading gold, I think, but yesterday he made 130%.
Yeah, that's TJ.
No.
Oh no, that was Sarge, wasn't it, or something like that?
It's Unker,
Unco. Oh, Unco. Yeah. I was
and he's like, my best day ever, 130%. Like, what the? Yeah, and I asked him, I said, what is your risk? Well, what are you risking? And he's like, 2%. Jesus.
No, he is not risking 2%. He's risking more than that.
Has to.
Okay. It doesn't. That's like 60 to 1. How can you possibly? I mean, you can add positions, but
Yeah, no,
I think
it has to
to
be
hit
higher.
130%.
No, he's saying he's the one position is opening 2%, but he's opening a multiple position.
Yeah, okay.
Risk per
Sorry.
trade.
I don't think I've ever heard of anything like that before. Like 130% a day is just insane.
Yeah, but you wouldn't be doing that on a big account either, as well. At some stage, as your account grows, so does your adverseness.
Well, I haven't seen any losing trades from him yet, so.
It's not something that people are too keen to promote. Hey guys, look what I did. Negative
Yeah, yeah,
50%.
Look how stupid I am. Yeah, I've done that.
Consistently hitting.
Follow me for more trade advice.
Yeah. Yeah, don't do what I do.
Watch me take a 1 million account down to 0.
You can do that if you say like a global trader of the year. You could do that, mate.
Oh yeah.
I could do that easy.
Yeah, that's easy peasy. So no, that's
Yeah.
no one. That's not impressive. showing a negative 40%. I can do that any day.
Oh, I have done it. I've got through. Oh yeah.
But that's fine. Like, you know, I've had so what did I make the other day? The number sounds impressive. It was something like 26% in the day. But it's because if I'm taking higher risk on a day, I've got an account that I'll use, and I'll go in with lot sizes. Like for example, I opened up I added a few positions. It ended up being a 5-lot trade, and the count is quite small. So the trade worked out. The trades worked out. The last trade I entered, so like I entered a few positions, and the very last position I entered, I closed at like a small loss because like I was scaling into it. But overall, it was a really good trade. It was up, yeah, like something 20 something percent. But you don't look at that percent because the account size is small. It's only a portion. Like if this was my main account, say it was my bank account that I traded, my bank account with all my savings in it, would I be treating it with the same risk? No way. So small account size, having plus 130%, there might only be like 5,000 in that account. And then if you a 5-lot trade on gold, you get like a 60-70 pip trade that you scale into just like once or twice with 5 lots, you can easily double your account. But if it's and like for a prop account, you wouldn't do that either. If you got like a 200k account that you're doing a challenge with, there's no way you open up that kind of risk.
Can I just ask Akshay what his assessment of German 40 is today? Because I'm seeing lots of resistances based on broken ATS zones and stuff, which make me nervous. But I'm bullish. Well, German's now climbing.
Yeah, this is looking good. It's done the little sweep. If I'm still cautious of it coming down, but if we can get some real strong candles up, then there would be people that have grown. There'll be people that have taken their trade, and no doubt they'll trail the stop losses. So there might not be any need for it to come and retest this area. It only needs to come in for because if it breaks this and makes a new higher high, then it just needs to form a higher low to sweep the trade and liquidity. So watch to see if you haven't jumped into it, watch to see what it does, because if it does make a higher high, then the next thing will be to make a higher low. But I'm not convinced yet that we're out of the woodwork yet. Out of the trees into the open. But if you did give it a shot with the sweep, good work. Actually, yeah. What's your assessment, mate?
I'm looking for sells on German 40 again, but not from this area. From the yesterday's 18150 area.
Okay, that's my
that area,
target.
yes.
Yeah,
Yes.
that's where I
Yes.
think we can easily get to. This 18150, this little rectangle. That's that high.
Yes. If you go to the 4-hour, yesterday we created a few candle from upside, so we left that liquidity now. So yeah, that's it. Yeah. So we have this FE candle here now.
Yeah.
So we left this liquidity. So above this liquidity, I'm gonna think about looking for any kind of position to again push the price to the downside. Also, if you see the structure, yesterday also we talked about the structure. that can you go a little bit here? Yes, got. So so lower low, lower highs, new lower low, lower highs, new lower low, lower highs, and now we created a new low now here. Obviously this is a POI right now, then price got a reaction, but until unless we are getting like a structure shift here, like a price is tapping one more time there and then shifting structure like this, then I don't have to look for long-term buys. I can still look for sells. Or another thing is body has to close above this high, then I can think
Above this
about we're
alert.
gonna continue pushing. Yeah.
This is that line in the sand I've had for a while, that alert. And once we're above there, I foresee this being an easy buy.
After yesterday's news, price, a lot of I think pairs start created a structure shift, especially for GBP AUD.
Oh yeah. Yeah.
So GBP AUD already shift the structure on 4 hour as well as an hourly. So I think it's gonna move to the upside.
Aussie really suffers when inflation's high in the US. It really suffers. You guys understand the connection with Aussie?
Remind me.
Because the way that export structure is set up is that Australia's got like huge resources. So you need building and global optimism for that. So at the moment, like the sector that's really driving the economy is the tech sector, and the tech's, you know, apart from like some of the byproducts that they use for the materials, it's not like construction. It's just technology. So they don't really have a huge impact on Australia's exports, unless it's like maybe lithium and some of those other like rare materials. But if interest rates stay higher, then it's going to put a dampener on all things like building, house permits. It just makes everything more expensive, so that there's a little bit it really affects the export market for like coal and iron ore and stuff like that. So with their higher CPI print, Aussie's one of the main victims there. So we saw like it just become the weakest of all of them. Sorry, yen was the weakest, but look at what Aussie did. Aussie just cratered. Still going. Yeah.
Holy jolly. I didn't even look at that. Jesus.
And the same thing, other way around, is what I said in the Discord with Ive. Was saying like if inflation comes in low, look to see pound and Aussie be really strong beneficiaries. Pound's still a beneficiary because the way the banking sector is all set up. But if inflation came in low, you'd expect to see Aussie really outperform. But it came in the other way, it came in high, so it's just the opposite. You see Aussie really crater. Alright, come on down.
So if you see here, when we are moving from here, we are creating higher high, higher low, higher high. But here we broke the structure here. We broke it here. After that, this is just an internal structure here.
Yeah.
Price came back upside, and this was a lower high which created a new low. Then again we got a pullback, generated liquidity here. Price took out that liquidity, and then again we created a new low. Then again we got a pullback. This is the lower high which created a new lower low here. And from here, this is a POI for daily. So from that area, we got a reaction to the upside. We broke the structure here. So expectation is pullback and then continuation to the upside. And we also have a liquidity here in the form of trend line now.
Yeah, beauty. Pullback straight there. That's a nice swing trade. Really nice swing trade idea. Are you thinking of doing swing trade on GA?
Yeah. So
I love GA.
I added GA, EA, then Euro USD, then NAS 100, then GBP USD.
Say that
These
again.
are the pair I'm
NAS,
looking
pound Aussie.
GBP AUD,
Yeah.
then Euro USD, then
Euro, yeah.
NAS 100,
Yeah.
then GBP GBP JPY,
Yeah.
then German 40.
Oh, great one. Awesome, man.
I think one more is oil, WTI.
Oh, oil.
Yes. I mean this whole month I'm just testing this thing. I'm not taking any light trade yet. On swing trade at least.
Yeah, that's when I'm on holidays. I'll swing trade. I really like these scalping sessions during the morning, but they can be stressful. Whereas swing trades are, you put pending orders in. Sometimes you just because you don't have to manually make the decision to enter. You just pick an area you like, and then when it hits, it hits. But that's a lovely setup on pound Aussie. Hey Ty, we went down against yen though, huh? Aussie yen. Oh yeah, I guess Aussie was the weakest out of them all. You're right. Aussie was Aussie stank yesterday.
It's like in the toilet. It's like the worst possible.
Yeah, it's the crumbs. We're right next to the Zimbabwe. See
still the AUD JPY is still in bullish trend.
Oh yeah, for
based
sure.
upon 4 hour.
Yeah, we don't we're so overextended. When we say we went down, it's just how you performed yesterday. Yesterday was the weakest of all the currencies.
Yes.
But yen because the interest rates are by far the weakest. And I'm expecting yen to have a bit of a pullback today, because maybe there's a lot of people thinking we're going to drop, so there could just be another little push up, but no doubt we'll have a correction, because the Japanese don't want their currency to be devalued that quickly in that short space of time. So they'll defend it. They'll defend their currency either two ways. Verbally they'll come in and they'll say they're going to do it, and that will lead to investors just being a little bit cautious. Or they will actually do something where they'll sell US dollars on the open market. And what that do is increase the amount of supply of US dollars, and then it's just simple economics 101. Increase of supply means US dollar will fall back. Alright, well, I think we're getting close to a trade soon. Hi Tony Cato was just congratulating you actually on your pound Aussie analysis just then. That is quite I quite love how price does this. Things like this, when you're like, what the hell, are we trending bullish or are we still on the downtrend? This really confuses a lot of people, this move, this complex pullback. This is a pullback, a simple pullback. This is a complex pullback. What's the reason from a liquidity point of view when they say grab liquidity? Why would they do one of these kind of pullbacks? We've got that structural shift that actually I was pointing out, and then you've got internal structure. Why do they do this internal structure?
So usually, for example, we are creating higher low on the 4 hour. But internally, when we are getting this kind of pullback, on 15-minute, we are seeing like a price creating lower low, lower highs like this, coming downside. So this is just an internal structure. Until, for example, on if you open any chart, like a higher time frame chart, when we can open German 40 also. So on German 40, when we created a low like this, then until unless the price broke this thing with the body, this we cannot say this is the lower high. If price broke that thing with the body, then we can say this is a strong low, which I mean the lower high, lower low, which created a new low here, this new low. So internally we are still bullish, but they want some kind of pullback. Also, a lot of after people seeing this like a support was formed or anything like that, people wanna take a buy. Maybe let's say this was the previous support, resistance was here, price close above here, and people just wanna take a buy after that, price closing above that support. But with the structure on the 4 hour, we are still bearish. We haven't broke the structure. We created a new low here when body closed here. If you see, this was it's just a body was closed below that area here, just a small body close, and then again we're gonna expect some kind of pullback. Either I think a lot of people also use fib also from high to low to see which area price can get some kind of pullback. Like they use 61.8%, I think, 50 to 61%.
Yeah, the
But
golden zone.
if you but let's say based upon this strategy, we can use like where is the liquidity is sitting here. Usually when they are pushing downside, they're gonna generate a liquidity, induce people, this kind of liquidity was gonna generate, induce people to look for a sell, and they're gonna come back one more time, and then actual move gonna happen to the downside.
Yeah, exactly. And you've also got people that have been partaking in the sells, because only wave price to have gone on my one that I drew here.
Yes, sorry.
That's right. When price is going down, we know there's been selling taking place here, and selling that's been taking place here, and then a lot of people, when you do make that resistance, a lot of people will be trailing their stop loss below the swings. So it just becomes like it's also inducing people to enter new sells, put the stop losses above double tops, M patterns, things like that. But it's also the people that are existing in that trade trail their stops, so you just get this like little heat map of liquidity sitting above there. So often price will do that. Every now and then you get like simple structure, and then you get a complex pullback, and it just raises liquidity. So in the end, it's very efficient way of making sure that they're the only ones in the trade and taking everyone else out. That anyone that uses leverage, let's put it that way, anyone that uses leverage usually gets washed out of the trade if you're greedy. Because
Okay, so
let me add
as
one
you
thing.
said,
Let me add one
yeah,
thing.
yeah, go ahead.
Is that
Yeah.
if you're using leverage, people, just human nature is you either get greedy where you're going for too much, or you get defensive, and that's where you try to defend the profits you've made. Both of them are counterintuitive to what you should do in the market. For the ones that can actually move the market with their capital, they've got unlimited capital, obscene amounts of capital, they really can just rinse everyone. For people that are either too greedy or too defensive, it just doesn't work in trading. You got to be conservative with your entries. Sorry, conservative with your take profits. Like I think, personally, to last a long time, is don't be worried about taking profits off the table, because the markets are going to prey on those that are too greedy. Or you can just be completely like a sociopath, just don't care, and you just have a large risk appetite and you don't get defensive. And then those people like the Tom Hoogards, they can really capitalize, because they are not greedy, but they've got a method, but they're also ultra aggressive, and you need to be a specific way to be able to do it successfully. Anyone that's kind of got a foot in both camps, that's either greedy or wants more, too scared or too defensive, you're gonna constantly get taken out. That's the way the market moves. Go on, actually, sorry about that.
No problem. So for example here, let me bring back that. Yes, here. So we are creating lower low, lower highs like this. So a lot of people trying to take a sell from here, or they think that now this is a reversal time, that price broke the structure here. But they have to understand this is the lower high which created a new lower low here. So until unless price is closing above here with a body, I'm not saying it has to be like a wick. It has to close with a body. Until unless body is not closing above that, you have to just look for, you just have to look for sell in this area. If body is closing above, then you got the idea that the price is gonna pull back and then continue pushing to the upside afterwards.
You can, like technically you can look for buys, because it depends on the time frame you're looking for those buys. If this is like hour structure and you've only got like an hour to trade, then we know that like most likely this is the liquidity that is going to, or somewhere inside of here. So if you've only got like, say you're only going to trade on like a 30-minute time frame, and you think the likelihood of the next candle, there's a better chance that it's going to be bullish at some stage to grab the liquidity. It might even finish a candle like this. But if you're only looking to trade on the small, like be in and out, you can look for buys. It's just note that if you're trying to swing trade this, you're most likely going to lose trying to swing trade a setup like this. But scalping,
you are not holding it for the longer period on this one. You are just looking for getting your 10, 20 pips, 30 pips, and then close your position.
Yeah, it's really important to understand what time frame you're trading as well. Like that's why I like scalping, is because I will say I'll stand by this till the day I die, is that when you're scalping, your ultimate bias doesn't matter. As long as you have a bias and you're good with your poisons always. Your bias really doesn't matter then. As long as you have a bias. Let's adjust this trend line a little bit. Come on, German. It's done nothing. This is what I expected with interest rates around the corner. What's gold doing? What are we up to? 37.
Slowly coming back to my entry.
Let's move 50 pips.
Yeah.
So it's moving more than German. This is, so the same thing. This is that structure again. Everything's in a microcosm. This is that complex pullback. Because this one, internal, like little structure, we created a big drop here. Now it's sort of ranging, but we're starting to create that downtrend, and now we've just got on a little tiny cycles after having broken like this zone. Now it's unless we created a new lower low, lower close, now you're expecting to see a lower high. But when you don't get that lower high, sorry, lower low here, this could be the start of a bullish move. But either way, in both patterns, if it's going to keep on going down, it's still going to do a break above this, and it's going to lead to a pullback. It's just now they're quite clever in how they disguise this. Is this the start of the new run up? If you look at other higher time frames, you could get that impression. But having this, like this little pullback here, is going to be the same either way. If you're looking for longs or looking for shorts, highly likely that once you break above that swing high, that you get a little bit of a exchange of buyers and sellers. How wise is it along the phase 2 of Euro USD? Price is hovering just above last week's low. Euro's going to suffer. Euro's going to suffer here with this US inflation. I think they were hanging on with a thread. Depends on how long you want to hold that long for. Like, there's no doubt liquidity underneath these areas. And if we do go and make a new lower low, then expect the price to do a pullback either way. If you're expecting it to go long to recover some of this area, you're never sure where that lower high is going to be put in. So you could, if you're only longing for a short time, yeah, absolutely, there's definitely possibilities there. Holding across a couple of days, we would need to see a surprise PPI where it comes in lower than expected, but I mean, that's possible. It absolutely is possible, but the way that things have been going the last couple of months, I can't see. Let's put it this way: year on year, PPI will go up no matter what. There's a 99% chance that year on year PPI is going up, and that could be the thing that people are most worried about. Month on month is a little bit, you know, would we get? It could come in higher or lower. It could come in, let's say it comes in at 0.5, then that's going to be bad news for Euro. Even if it comes in at 0.2, less than the month-on-month expectations, year on year will go up no matter what. Because the number that this month is replacing, if you have a look, is this one. You're replacing a minus 0.5. So the only way for year on year to go down is for PPI to become minus 0.5 or minus 0.6. And I cannot see that happening, no matter what. So year on year is going up. So I imagine that's going to be pretty tough for anyone trying to long, short the US dollar for today. Oh, gold rebounding again. Did you survive?
Talking to me?
Yeah.
Yeah. Yeah.
When do we give up on German and go to gold? I like German because I got a clear plan today.
Oh, I'm German's moved 30 pips this session. What do you want?
Well, we could have thought that it's gonna just be tough to get any sort of significant moves in this open, so we could have shorted, bought, shorted, bought, shorted, bought, played the range, and then made 100 pips from all these trades combined.
Yeah. Where do we start now?
30 minutes closed, 15 minutes. You reckon we should give this you reckon we should just try short down? I'm going to put a little trade on, just a little range trade. Small position because I'm playing around, just being silly. Some of the bloody thing. Okay, gonna see if we can play the range. Just put a little trade in. Yeah, what price did they get? 94.1. Should we try scam the market as well? Yeah, I'll try. Try scam the market. 94.1. Thing is, see, please don't come to my stop loss. Problem is people just, like on the YouTube side, they'll come in just now and they'll be like, what the hell? So I better be serious. Actually, I won't even put it in there. I'll just put some lines in so we can check. So see if I can get, if we get, even just get 10 pips out of it, I'll secure some. Who does trade on C Trader here? You do actually, don't you?
Yes.
Yeah, I've got it.
So every time I close a trade, it tells me closed at VWAP, this price.
Yeah, mine says that as well.
And it's a little bit different than like when I watch price go up and down, it's a little bit different to what I see on MT5. So I wonder if the way that they're looking at it is they've got like a VWAP of 1. So a VWAP of 1 just means basically it just tracks current price, but it will also give the average of the bid and ask. So I wonder if that's like there's just a slight little difference there in how they close the trades versus MetaTrader. It's no problem.
Yeah.
It's just something interesting.
Also, if you link with TradingView, you will see different price on the TradingView compared to the C Trader.
Yeah, that's because they do that. TradingView is the average. It's always the average between the bid and the ask. Whereas like MetaTrader always gives you price where the bid is. So it is slight different, and I noticed TradingView is a little bit slower than MetaTrader as well. Alright, well, did anyone take this as well? 5 pips in profit? Or 4.9 rather. 5.4, come on, get the 10. Oh, 7.5. Eight. Oh, it's coming back. Should have secured at 8. Yeah, this is moving before closed. TradingView's moving ahead of C Trader. Maybe I can high frequency trade this.
If you want really accurate price data, you should go to Smart Charts.
Hey, don't swear at me.
I was watching it the
Oh,
other
I'm going
day.
cheap.
I was watching it the other day. There was a $5 difference in the price on TradingView and what I was showing on Smart Charts. While I was busy trying to scalp with a like 10 spread or something. It was ridiculous.
Yeah, but the thing is though, is you go to different brokers and you have different prices. So it's not like if there's a difference, like I think who is it that's got a 20? I think it might be Justin actually. That where he looks on his broker, there's a 20 pip difference, and it's just broker difference. It's like when you get let's say, do you remember? Did you see the study session on the weekend?
Yeah, I did see that. Yeah, I just I mean, even on reflection, I think Smart Shots is out.
Hey, let's keep names to a minimum here. we know who to. I don't want to get flagged.
Sorry, I forgot about the YouTube channel.
Yeah. Just the channel, just the YouTube. Keep going though. Tell me what you're saying. Paul?
Yeah, sorry, I was talking on mute.
Oh.
No, I've stopped looking now. I'm only using TradingView. It's just easier.
Yeah, it's easier. So,
For providing their cap.
okay, remember how I was talking about this in the webinar, that you'll have a broker.
Yeah.
You have a broker, and you know, trade even Pepperstone will have both options because there are some benefits to being an STP or an ECN. It's purely personal preference. Now, if either way, let's say that the broker goes into the liquidity pool and they get their data from well, let's say there's actually a bit of a broken link here. Let's say that the broker gets they get their data from liquidity providers, and these are like they're ranked in tiers. So the most expensive data would be a tier 1 broker, tier 1 liquidity provider. If you want to be on the El cheapo side, you can go to someone that will offer you liquidity, but they'll be really cheap and have a really shallow liquidity pool. So you'll find you'll get like spikes and stuff like that, and just all weird stuff happens in the charts if you don't pay for high quality price feeds. The Deutsche Bank, JP Morgan, like Credit Suisse, they're like the three of the biggest ones. You can see like in the size of these little circles that I've got. Now, all brokers will use multiple, because if say Deutsche Bank goes offline, then all of a sudden, you know, all pricing just stops and you get like a massive crash. But so they'll get pricing from multiple liquidity providers so that they get like more of a stable feed. But let's say broker 1 gets the bulk of their data from Deutsche Bank, and then they have like backup from like RBS and Citibank. And let's say broker 2 uses HSBC, some undisclosed ones, and UBS. Then all these banks they'll have like an interbank where they talk about like what kind of, like petrol stations, what kind of rates that they can offer, but they're not going to be exactly the same. They're going to be in the ballpark, but not exactly the same. So what you'll get is difference in prices between broker 1 and broker 2. The movement should go the same, but either way, when you look at the different broker feeds, this pricing will be different. It doesn't mean broker 1 and broker 2 is any better than each other. It's just they've got different. They're getting different liquidity feeds from their liquidity providers. So, for example, look at Pepperstone. We know Pepperstone's high quality, and then you match that with. Well, let's use gold for example, because with gold FXCM price is at 2336.12, and if we compare this with another gold price feed like this one, Forex.com, you can see the difference here right now. Now you got to like disconnect your eyes so you can look at both of them, but you see like how there's about a 20 cents difference. 3035.9, this one's 236.10. So they're just Forex.com and FXCM, both high quality, but they get their data from different liquidity providers. I see it. I see Dave. Dave's. You guys are holding hands on the way out, eh? The days are left. And then you've got this one, Oanda, as well. So Oanda, they're going to be different again. So look at Forex.com, and then you look at Oanda and Forex.com are pretty similar. But does that make sense? How it's nothing to do, like if you use, especially if you don't use like tier 1 or you don't use like high quality data liquidity providers, and you get like some of these undisclosed ones, then some of them are going to give you like some really some prices that just are not the same as some of these other brokers. But the movement, if you actually just look at the candles, you look at the shape of the candles, unless if they all open and close at the same time, like the 4 hour on some brokers opens at 0300 East 0300 GMT, and some open at GMT 0, and some open at 0100. So when you get a 4 hour candle, some of them will look different because they've got they open an hour differently. But if you
German pushing.
Okay, but if you look at the hour time frame, doesn't matter what the price here, if it's a $5 difference or anything, or 50 pips or 50 cents, what it should be, the hour candles should look pretty similar. Oh, I've got to go. Shoot, sorry guys. I just looked at the time. Yeah, I've got to end. I've got to bounce. So, hopefully we can push up to 18,150. Gosh, man, that just time flew. I literally looked at the clock and I thought it was 8:40. Yeah, not much happening because of euro interest rates, so kind of expected to be crappy. Took a little sell, got eight pips in profit, and then it came back to entry. So it was I was hoping to get them 10 pips secure, hope for the best, but didn't do anything. All right, guys, appreciate yous. Good luck today. Be careful. It's a very news heavy day. Just defend your capital. If you're like, news is not the day to make a bucket load if you're not doing well already. So just be really careful. Only risk what you can afford. Understand that crazy things happen in news days, but yeah. My Zoomers, I'll be in the Discord as well, so hit me up if you need help, okay? Alrighty.
No worries. Have a good night
Right.
or good day.
Thanks, Aiden.
Cheers, guys.
Thank you.
See you.
See ya.
Cheers.